afternoon. Thank you for joining us today for EMP Metals Corporation inaugural webinar with Adelaide Capital. EMP trades under the ticker symbol EMPS on the CSE and EMPPF on the OTCQB. There will be an opportunity for Q&A after the presentation. With us today from the company are CEO Karl Kottmeier and COO Paul Schubach. Welcome, gentlemen. I will turn it over to you both now to begin the presentation. And if anyone has any questions, please enter them in the Q&A box, as I mentioned, or you can email me at jessica@adcap.ca. Thank you.
Oh, hi, Jessica. Thank you very much for having us. It's great to be here. Welcome, everybody, to EMP Metals. My name is Karl Kottmeier. I'm the CEO of the company and one of the founders. And with me is my partner and our COO based in Regina, Paul Schubach. We'll walk you through the presentation, and as Jessica mentioned, we're happy to take questions at the end of it. So we'll kick off right now.
Perfect. Okay, we'll get right into the presentation here today. So again, we are a lithium explorer based here in South Saskatchewan. Looking overall at our overall land package, we're sitting on about 200,000 acres of total land to date. Of that, representing 90% of that is through Crown or through public land auctions that we have acquired that acreage, and then 10% is freehold. We are continuing to acquire more freehold through negotiations with the local landowners, but continuing to increase acreage through those negotiations. We have updated our current resource estimates. We just submitted that release earlier this summer. We have now upgraded that resource 2 million tons of resource on that 200,000 acres, representing 900,000 tons in an indicated status at 141 milligram per liter concentration, and 1.1 million tons of inferred resource at 112 milligram per liter concentration. And that resource estimate today is just on our Mansur and Viewfield properties. Again, we're looking at both of those today as individual projects, with our main focus currently being on the Viewfield property. Just taking a quick high-level look here at the management and directors of the company. Karl, I don't know if you want to do a quick intro of yourself, and then I'll touch base on my experience.
Thanks, Paul. So as I mentioned, I'm Karl Kottmeier, the CEO. I have a career in corporate finance and investment banking. I've also, for past 25 years, been listing, administering, and financing public companies. Worked all around the world, West Africa, Mexico, Canada, Northern Canada. And I'm very happy to be back in Canada working in what I feel is the greatest mining and extractive resource environment in the world, which is Saskatchewan.
Just to continue here, myself, Paul Schubach, well-diversified background of engineering experience, currently registered as a professional engineer here in Saskatchewan. Spent the last 10 plus years of my career working at Mosaic Potash Belle Plaine, which is the world's largest potash solution mine. So a wealth of mining experience and solution mining or brine experience with brine extraction of minerals. So carrying that over into this lithium brine industry, a lot of parallels as I bring that wealth of knowledge over. We've got a couple other notables here. Craig Foggo, he's one of our newer directors, came on board with the large investment that we received from Tembo Capital. And then Bryden Wright, another new director with the Rock Resource Group, again, another large shareholder of EMP. Touch base on the project technical team. Again, we've added Darcy Walker, our field supervisor. He's been in Southeast Saskatchewan working oil field for over 40 years. So he brings a wealth of knowledge on both the drilling and completing activities as well as construction of facilities. So we've been leaning on him to execute all of our drilling programs since day one that EMP had started doing some exploration drilling. And again, he's leading up the current demonstration facility build that we have in progress, and we'll update later. Looking again at some of the subsurface experts that we have helping us out, both Cam Taylor and Brian Wright with Rock Resources. Again, they've been doing oil exploration and production of both brine lifting facilities and disposal here in the province for a number of years. And then Jared Lekomsky is helping us out with the land aspect of acquiring both the public land auction and some of the freehold negotiations. Also, too, on this list, we don't have listed, but the partnership that we have with Saltworks Technologies. Again, they've got 150 technical staff at their facility. And again, with the partnership that we've established with them for the demonstration facility, again, we have access to those resources as well to add into the project technical team, moving and advancing this resource forward. To talk a little bit about advantages of Saskatchewan, again, Karl mentioned this is one of the best jurisdictions in Canada to be developing a mining project. And again, that those advantages continue just with the lithium brine resource that we have available to us. You can see here on the screen, we have an average of 125 milligram per liter across our entire land base, but we have tested some of our reservoirs as high as 259 milligrams per liter. And again, this leads into some of our subsurface development strategies where we're looking to isolate those high-grade zones via the use of horizontal drilling, again, which we have been successful with our drilling program last year, where we drilled the first horizontal lithium well for lithium extraction in Canada. Combining that on the advantage side with high concentration, we also have a very clean brine that's available to us to process. And so some of those high contaminants, H2S and residual oil, we do not have that in the reservoir. And what that directly relates to is CapEx and OpEx savings. Again, removing that H2S prior to going into direct lithium extraction or DLE is critical. And so some of that requires scale in the operation from a tonnage aspect, but also separate facilities essentially to be built and equipment to be put in place to remove that gas prior to processing. Continuing on with other contaminants, low contaminants in the reservoir, low iron, silica, and organics, again, all representing lower cost and more efficient extraction operations. And then the concentration aspect, again, we just need to move less volume to produce the same desired tonnage with the higher concentrations. Also, too, relatively shallow drilling depth in comparison to some of the other projects in North America. We're about 1,800 meters. And again, all of this represents lower CapEx and lower operating costs to extract and process lithium chemicals. Continuing on here with our Saskatchewan advantages as well, we find ourselves in the heart of the Bakken oil field. And so what this brings is 50 years of existing infrastructure that's at our doorstep, and to utilize this ranges from existing roads, well-maintained grid road system, paved highways. We also have rail loading facilities in Stoughton, which is about a 15 to 20 minute drive from our current core area that we're developing, as well as all the skilled talent that exists in the area for this type of operation. Again, brine lifting and disposal for oil production has been very common. And again, you can see with the extent of the well infrastructure that's in place, representing by all the circles and the gray lines on the screen here.
With all the well data that's available to you, that's got to be cost savings, I would think, extreme cost savings compared to some other areas that some other companies that may be doing brine lithium.
Yeah, so part of that, I guess there's a secondary part to that. So a lot of the Bakken development is at a depth of about 1,500 meters, and that's where you see the majority of these wells that are drilled. And again, our lithium brine resource is not in the Bakken. We are in a deeper reservoir called the Duperow. And so again, relating that to the cleanliness of this brine, this is not a reservoir that we're producing that is oil bearing or has had injection of other oil and gas disposal wells into the Duperow. So That brings an advantage to the clean brine we have. There are some deeper oil pools called the Red River, which aren't as common as the Bakken. So there is some well data available that have essentially drilled through the Dupereau. But a lot of the work that we are doing today, it does require some more drilling and data points to get into the Dupereau reservoir within our land package.
Okay, thanks.
Yep. I want to touch on some of the strategic relationships that we've developed over the lifetime of EMP. Tembo Capital came to us as a private equity fund in, when was that, Karl? 2023, I believe.
We began discussing with them in 2023. They performed 9 months of the most in-depth due diligence I've ever worked on, and they made their first investment in the company in late 2024.
Okay, and then Rock Resource again was one of the initial identifiers of this lithium opportunity in Saskatchewan. We have equitized their interest into a 17.5% equity interest or shareholder of EMP. When we look at the technology side, again, we've done some extensive piloting work with both Koch and Iliad, two of the top names, in our opinion, in North America, for direct lithium extraction or DLE-based technology. And then on the further processing side, this is where we've had Saltworks engaged in this project for a number of years. They were, again, initially a vendor that was doing our back-end conversion. So your purified lithium chloride coming out of your DLE would then be converted into lithium chemicals. And that's where Saltworks' specialty is. They produce modular skid-based refining solutions for semiconductor businesses, as well as other wastewater treatment businesses. So Saltworks, then again, we've taken sort of next steps with them, and they've wanted to get more involved in this project, coming on as a partnership agreement to develop our demonstration facility that is currently in construction. The government of Saskatchewan continues to be supportive of critical minerals production in the province. We have recently been the recipient of up to 4.27 million Canadian dollars in transferable royalty tax credits. And this is directly going towards our demonstration facility called Project Aurora, again, in partnership with Saltworks Technologies. Again, we've got that partnership in place. So Saltworks is bringing all of the design and build, as well as the operation of the plant itself. And then we get to leverage the existing infrastructure that EMP has already invested in at our 4 of 23 location, which has a pad on it with our existing vertical test well, as well as that horizontal well that will be feeding processed brine into this facility. So again, we continue to see great, engagement with the government of Saskatchewan and continued support here directly to Project Aurora and the continued advancements of that demo plant. Just a high-level touch on the Viewfield project itself. Again, we've got 4 wells in place within Viewfield. Just really noting on that 259 milligram per liter of the Weimark D, specifically of that Dupereau reservoir. Again, Weimark D, Weimark C, fairly high concentrations and good flowability from some of the initial flow testing that we've done on all of these drill wells. And again, happy to say that the Viewfield 1 at 259 is the highest lithium brine concentration found to date in Canada. 237 would be the second highest. And then as we continue on over into our Manser project area, we have a third well tested at over 200 milligrams per liter. And again, those would be the top 3 wells that have been discovered to date in Canada. So what's our next steps and pathway to commercial production? This overview, this shot here is our 4 of 23 sites. That pad here to the right is currently being prepped for the building. We actually do, as of today, have a building structure that's up, getting ready for some concrete work to happen starting tomorrow. So Wish I had an updated photo in here, but this site will be quickly changing here over the next 6 weeks in preparation for winter, and then in preparation for equipment arriving from Saltworks in early 2026. So phase one of our pathway to commercial production, this again, we're calling Project Aurora. It specifically is our demonstration facility. And so what we're trying to prove here is really prove the flow sheet or prove out an end-to-end process, as well as prove out our hub and spoke based model that we see our commercial scale up occurring in. Again, we have done extensive piloting operations, but these are essentially unit operations where you're doing one process step and then you stop, and then you do another process step and then stop. And so we're taking this as a demonstration plan, sort of end-to-end flow. The spoke that we are developing here is the demonstration plant in Saskatchewan, with the conversion hub happening in Richmond, BC. And the reason why we're having two separate sites on location is really from a cost savings perspective, because Saltworks already has their lithium conversion hub set up and in operation out in Richmond, BC. So part of what we're building here in Saskatchewan today, we're going to be direct wellhead connected. We're bringing raw brine in from the subsurface through a pre-treatment step into DLE and then into membrane concentration. And so the output of our spoke demo plant is going to be a high purity lithium chloride that will then get shipped out to Richmond, BC, where they'll go through the following steps here, which again are just conventional water treatment type steps, and ultimately producing lithium chemicals on the tail end. And so this demo plant will allow us to understand the economics, prove the process, get more runtime on direct lithium extraction and understanding the ins and outs of that process, as well as understanding what chemical do we need to produce on the tail end and what kind of cost can we obtain through either offtake agreements or in the open market. And again, part of that is, do we need to go to battery grade, or can we produce a technical grade or an industrial grade? And then how does that impact the overall project CapEx requirements and the overall revenue of the business? So this demonstration plant, we've estimated total project cost at about $10 million to get this project built and operating for upwards of 12 to 18 months is the operation schedule. Again, happy to say at this point that with the contribution of the Sask government, we are funded to execute this program today, and again, moving forward without requirements of any capital raise to support this program. Phase two, we're calling our stage one commercial plant. This is really centered around optimizing the engineering that Saltworks is able to execute for us. Again, the way that they establish these facilities, they have existing platforms for a lot of this equipment already. Again, being so in depth in the water treatment industry, they produce these skids through their facility today, just with some slight tweaks and modifications required for processing lithium versus wastewater. So the design of these facilities and the rollout or the scale up of it will be in 3,000 to 6,000 ton per year increments. The spokes representing a 1,500 ton per year facility. That's where, again, what we're producing here in Saskatchewan as the demo plant will be representative of, and then with a 6,000 ton per year conversion hub. And when we do hit commercial sized equipment, both the hub and spoke will be located here in the province of Saskatchewan. We're estimating 3,000 ton per year refinery today to be about $180 million capex requirement. And really, again, Project Aurora will allow us to refine these capex estimates and understand our operating costs with more certainty coming out of that program.
As you said, these are bolt-on kind of little mini refineries. Is that correct way to look at it?
Yeah.
For simpleton?
Yeah, then the way that Saltworks describes it, it's adult Lego, essentially, is what you're doing. And again, the graphics here kind of showcase that, where they build all of their equipment inside of frames that are then shipped out to the site. And again, the advantage of this methodology of building is, again, Saltworks can provide the end-to-end flow sheet in-house, so they have all of the technical engineering capacity to design, build, assemble, commission, and deliver these plants ready to operate. Versus using multiple vendors and using an EPCM over top of the entire project to help bring this thing together. So from a scalability perspective, again, the smaller base facility, the smaller CapEx requirement really allows us to play with, the business model and also control costs very well on the capital side. And again, the beauty of this, facility and design, again, is all these skids are essentially pre-commissioned before they show up to site. So it's all under one common control system, already run with water or other fluids as required. And on site, it basically shortens the on-site construction and build time, allowing you to get into production as quickly as possible. The last phase we're calling phase 3, which is really repeat our stage 1 design and build. We'll have the ability to scale this to any desired output. We do have a PEA on our Viewfield property alone, which is only 14% of our land holdings. And that Viewfield PEA represents a project of 18,000 tons per year, average of 12,000 tons per year. So 18,000 peak tonnage. But that only represents, again, that's a 20-year project at 12,000 tons a year on 14% of our land base. So we have lots of room to scale. Also, when you include, the Mansur wells that we've had success in the southern part of that land package, there's lots of opportunity for scale up here. Just touch base quickly on our 2025 work plans. Again, I won't touch too much on stuff that's already happened, but we commit to things in our work plans and we execute on them. And currently today, right now, we're main focus today is on the building construction and getting things prepped before the winter weather hits here in Saskatchewan. But advancing that on schedule and on budget, and then we'll be prepping to start receiving equipment from Saltworks. They're currently in production of those skids for the demonstration plant at their facility, and we'll be expecting to start receiving some of that equipment in early 2026. Karl, do you want to give a quick cap table overview?
So EMP trades under EMPS on the CSE. Market cap right now is around the $45 million mark. Very concentrated ownership between founders, Tembo Capital, our partners at Rock, where we equitized their interest last year. They are now 17% holders, and then a number of brokers here in Vancouver who've been supportive of us since inception. So right now we are cashed up and good with the external money coming in from the Saskatchewan government through the SCMII project, tax system, and obviously the commitment from Saltworks to spend upwards of $10 million on our project has been phenomenal. So we're really advanced through a lot of non-dilutive financing sources, which we're very pleased with, and we think that'll continue. So stock-wise, we're looking pretty healthy. Back to you, Paul.
Just touching quickly on the land aspects happening here in Saskatchewan. We continue to see good involvement and also some new faces arriving here through the public land auction and the results that get posted. Again, our Viewfield property, sort of call it right in the center, and a lot of land that has been starting to get acquired here as we move towards the east. So still lots of activity on, land being picked up through those public land auctions. And then again, for EMP, again, a focus on filling in some of that checkerboard via the freehold negotiations that we have underway.
Are land prices starting to go up in the area?
We've probably seen I mean, since the initial lithium brine permits that were put out, definitely an increase in land. I think the last two public land auctions, the results are, fairly similar. So whether we're seeing a plateau there or not, I guess it just depends on how the interest grows here and how much land is available of good quality land as well. It'll be interesting to see when some of these companies that have entered the space start posting either drilling results or those well results become available in the public databases. So why EMP? Again, we feel we have the best Canadian brine resource available to date. Again, matching that with our clean brine, really good concentration, or highest concentrations found to date in Canada. No H2S, no oil, and minimal organics. We feel our economics will be in the top tier of lithium brine projects in Canada. Combine that with the continued support we see here from the Saskatchewan government, we feel there's no better place to be developing a project. We're moving rapidly from both the technical advancement and project de-risking standpoints. Again, we decided not to be a technology provider, but rather buy that technology from experienced vendors that have that expertise there. So leveraging partnerships through, again, Saltworks, Rock Resources helping out on the subsurface, and then leveraging vendors on the direct lithium extraction technology piece to integrate all that into a overall flow sheet. Again, we feel this is a very buildable project. When you look at the oil and gas regulations that will be following, permitting is very quick to obtain. Drilling wells is easy to do with the flat, unobstructed farmland that we have available to develop this project in. And then combine that with the overall experience of the management team and the project technical team that we've assembled. This project is well understood by all parties, and again has the experience to back the advancement and moving this project forward.
Your technical team, along with Saltworks, is obviously gives you expansive knowledge on both, like you say, the subsurface and on the surface. Has that shortened the time to have met your milestones, would you say, compared to other companies?
Yeah, and I think the big part of that is EMP not deciding to be a developer of technology. You look at some of the other companies that went down the direct lithium extraction route, spent a number of years trying to develop that technology for their resource. Whereas EMP just took the direct approach that we'll essentially buy that technology. I think that has sort of shortened our timeline to, bring this project into production by a number of years when you're looking at some of the other timelines that some of the other companies have gone through. So yes, I completely agree that, the technical team that we have, everybody sort of having focus on their area of expertise and bringing those parties together will accelerate us for sure.
Now, can you explain how your property would differ from the Smackover in Arkansas, and the cost savings, etc., and the way you drill the wells, all that sort of stuff? I mean, it's a lot, but
yeah. So again, the Smackover seems to get a lot of attention these days. Again, there's been some larger oil and gas companies that have entered that basin and made some considerable investments in buying land to develop projects. So again, it's gotten a lot of attention that way. When we look at some of the cost or some of the key differences, again, the Smackover does have high concentration. Some of the reported results there, anywhere between 400 to 800 ppm. Again, so when we're looking at Saskatchewan, again, we've got, call it a comparable grade of 259 milligram per liter, but not the same grade. And that's probably where the biggest difference lies. When we combine, though, talking about some of the challenges of producing these brines, again, Saskatchewan's clean, H2S-free, oil contamination-free brine is where we really shine in that aspect on the key differences. So the Smackover does have H2S that needs to be dealt with. And again, I think lends itself to having to build scale in those first facilities, which are, again, going to be extremely CapEx intensive. 15 to 20,000 tons per year are some of the outputted tonnages of some of those projects, where you're talking $1+ billion to make that investment and get that project built. So I think we have a speed aspect on smaller modular type facilities. Our drilling is executed at 1,800 meters versus, I believe they're at a depth of 3,000 for the Smackover. And again, just the infrastructure and the development. You got a lot of deforestation. They got to clear an area for a pad. They got to bring material in to drill those pads. So I guess from an overall development side of things, we're quite easy and efficient to be deployed here to be drilling and developing this project here in Saskatchewan.
And then just on your partnership with Tenbo, have they committed to maintain their ownership if indeed you require additional financing?
Yeah, they have. They've been with us every step of the way, and expressed a desire to stay at 19.9. Obviously, we like that level of investment. Above 20, it becomes a bit difficult. So that's a perfect sweet spot for them and for us. And they keep a very close eye on what we're doing, and I'm talk to them regularly.
So let's just go through quickly the catalysts over the next 6 months. We should have equipment arriving, like you said, the beginning, anytime. You should have equipment arriving the beginning of the year. Will winter hinder any kind of, other than pouring cement? Will winter hinder any issue about getting the demo plant built?
No. So again, we are active to get everything we need done from the site development side of things prior to the winter hitting here in Saskatchewan. So again, we're on track to have no delays there, and essentially have that building ready to be receiving equipment as soon as those skids are produced. Some of, again, the catalysts here. So our main focus really is on the demo plant here over the next 6 months. Again, site construction should be wrapping up here about mid-November. We do have some other field activities that will be occurring throughout the winter, which again, don't hinder those types of operations from occurring. And then with Saltworks currently building and assembling equipment at their facility today, there'll be some progress updates with some of those substantial completions of those skids and ultimately arrival of those skids here in Saskatchewan. If all goes to schedule, again, we should be starting that facility up or going through some of the commissioning steps throughout sort of March, April timeframe, with, I guess, steady state operations occurring likely sometime in June that we'll be running stable operations through that facility.
Awesome. So we have a lot to pay attention to over the next few months for sure.
Yeah, definitely. And again, exciting with construction-based activities occurring. Just making this project more real as the days go by.
What are the expected costs per ton on the open side?
On the open side, on the OpEx side?
I'm assuming you meant OpEx.
Yeah, I would assume that's OpEx.
Okay, so again, where we're sitting today, we do have some more detailed cost estimates put together for what we're calling our Generation 1 flow sheet. We completed a front-end engineering and design study really centered around, call it a conventional, approach that, many projects are pursuing. That cost is coming in and around $5,000 per ton. Again, the goal of Project Aurora from the OpEx side is we were looking at both, innovation on technology and business case to lower that cost to production as much as possible. We do have some clear pathways to some reductions. This is either, again, via technology-based decisions or, the business case decisions in terms of, kind of hinting at, the full package that Saltworks can supply versus, an overarching EPCM that needs to get involved with putting some of these mega projects together. So again, the goal of Aurora is to try to lower that as much as possible. And through this operation through the study, we will be doing an updated feed study on our Generation 2 flow sheet, again, which we're hoping to reduce costs further and be cost competitive and globally competitive on the cost curve.
One other question I have on government funding. You should be, given you're an all Canadian company, there should be certainly more grants, et cetera, available to you, I would think.
Yeah, and so to touch on other sources of grants and technology incentives, again, there are other federal programs available. There's the Clean Technology incentive, which is a tax break of 30% on new capital equipment. So again, we will be looking to take to bring that program on any build out or commercial scale up. Again, that doesn't include every piece of equipment, but most of our capital equipment would fall under that category for the critical minerals production or clean technology investment that we'd be making on these facilities. Combined with that, again, there's other funds available that some of the other Canadian producers have already received. So we'll be applying into those programs as well, trying to capture as much non-dilutive funding or grant money as possible. Part of Aurora today is funded through NRCan as well. So that is, again, being brought to us through our partners at Saltworks. And again, they're familiar with these programs and will be looking to apply into more as we continue to advance the project.
I think we've covered everything. Again, if anyone wants a one-on-one, happy to arrange. And thank you, gentlemen, for your time this afternoon.
Yep, thank you.
Great.
Okay.
Thanks so much, everybody.
Okay, great.